What if I told you that a Brazilian government bond delivered more than 40% total return in US dollars in a single year? Not stocks, not crypto, not private equity. A sovereign fixed income bond issued by the Brazilian government. In this video, I will explain exactly how this happened using a real example, Brazil's fixed rate government bond 2031. And more importantly, I'll show you why understanding interest rate cycles in Brazil can completely change how foreign investors look at fixed income. Most global investors think fixed income is boring, low volatility, low returns, something you use only to preserve capital. That mindset works in developed markets, but Brazil is not a developed market. Brazil is an emerging market with high nominal interest rates, strong monetary policy cycles, and opportunities created by volatility itself. And the fixed rate government bond 2031 is a perfect case study. First, let's clarify what this bond is. The fixed rate government bond 2031 is a fixed rate Brazilian government bond. When you buy it, you lock in a fixed annual interest rate paid by the Brazilian Treasury, Brazil's sovereign credit risk, with the maturity in 2031. If you hold it until maturity, you receive exactly the contracted yield. But here's the key point most investors miss. You don't have to wait until maturity. Brazilian government bonds are market to market daily. That means their prices move based on changes in interest rates, inflation expectations, and macroeconomic conditions. When interest rates fall, fixed rate bonds rise in price. And that's exactly what happened. During 2025, Brazil experienced a strong closing of its interest rate curve. As inflation expectations improved and the market started pricing future rate cuts, long term fixed rate bonds surged. According to official Tesouro Direto data shown to you on the screen, fixed rate government bond 2031 delivered more than 26% return in 2025 alone, purely due to market appreciation. Let me repeat that. Over 26% in local currency without waiting for maturity. I'll leave the link to the Brazilian Tesouro Direto page shown in the video in the description in case you want to check these numbers more carefully. Now comes the second layer of return that foreign investors often underestimate: currency. During the same period, the Brazilian real appreciated around 12% against the US dollar. So, if you are a non resident investor, your bond appreciated and your FX exposure worked in your favor. When you combine 26% bond appreciation, 12% currency appreciation, you reach a total return above 40% in dollars from a government bond. And here is where this story becomes even more interesting. As of today, the Brazilian yield curve continues to point toward a gradual decline in interest rates. Inflation expectations remain anchored. Monetary policy is restrictive, and the market continues to price further curve compression. This means that the same structural forces that generated these returns are still in place. Of course, markets never move in straight lines, but if the current trajectory continues, the probability of strong mark to market gains in long term fixed rate bonds during 2026 and 2027 remains significant. This is exactly why professional investors position themselves before the cycle fully plays out. Now, let's be very clear about risk. This is not guaranteed, this is not linear, and this does not happen every year. These returns are the result of correct positioning in the interest rate cycle, understanding duration and volatility, accepting short term price fluctuations. At certain moments, the same bond showed temporary negative returns on the screen. That volatility is not a flaw, it's the entry price for opportunity. This is also why many Brazil's ETFs fail to tell the full story. They dilute duration, exposure, entry timing, and currency strategy. Direct access to the bonds through a CNR account allows you to choose specific maturities, control duration, decide when to realize gains, and manage FX strategically. This is how institutional investors operate. Brazilian fixed income, it's not just about earning interest. It's about macro positioning, currency dynamics, and using a regulated, transparent market to your advantage. If you want to evaluate whether bonds like Brazil's fixed rate government bond 2031 make sense for your portfolio and how to access them legally as a non resident, you can schedule a confident conversation using the link in the video description. Subscribe to Interest Exporter for weekly insights on how global investors can access Brazil safely, strategically, and profitably. Let's explore Brazil together.